questions. They shape our world. Behind the gleaming facade of Singapore's financial industry lies a story of courage, tenacity, and enterprise. For the first time in 1965, we asked the question, what now? Separated from Malaysia, we needed to survive with no natural resources, and failure was not an option. But by what means? First things first, funds, to pay for roads, housing, healthcare, education. But talks for a common currency with Malaysia failed. Singapore takes its share of the reserves following separation, and for the first time, we start issuing our own dollar under the currency board system, each note fully backed by international reserves, a significant portion of which is in sterling. Dr. Goh, then the Minister of Finance, questions the longevity of such a small pool of reserves. He knew it needed to grow, but the question that nagged him was, how? 1967, the sterling devalues by 14%, and Singapore's reserves value is eroded. 1973, the Bretton Woods system collapses. The Singapore dollar floats. First, in that same year, and then again in 1979, oil prices increase and cripple the global economy. Currency volatility, oil price increases, stagflation. The young republic's founding fathers quickly realize it is better that we look after our own reserves rather than leave it to others. We decided that we must be masters of our own fate. In 1971, Dr. Goh spearheads the formation of the MAS, who would manage the country's reserves to foster confidence in the Singapore dollar. Sound fiscal policies and rapid economic growth expand the young fledgling nation's reserves. This increase in reserves, 4 times in 4 years, from $631 million in 1965 to $2.4 billion in 1969, was not, in Dr. Goh's words, a common occurrence in the monetary history of nations. Up until then, efforts to protect the reserves were focused on sustaining a stable Singapore dollar. By 1981, the reserves amass a healthy surplus. For the first time, confidence births curiosity. Curiosity, ideas. And ideas, the mother of innovation. Could funds beyond what was required for managing the Singapore dollar exchange rate be transferred to a dedicated investment corporation, wholly owned by the government, for higher yields in the longer run? Curious, Dr. Goh and Mr. Lee toy with the idea. A new institution with access to the bulk of the reserves, with the ability to take on investment risks the MAS could not. The goal? Long-term, high yields, effective management of funds through investments. Increasingly, he believes in it and manages to convince then Vice Chairman of OCBC Bank, Mr. Yong Peng Hao, to head the organization. Mr. Yong's first recommendation? To incorporate it as a private company, which would manage, not own, the foreign reserves. On May 22, 1981, the GIC is incorporated under the Companies Act, and the world sees its first prototype sovereign wealth fund. In a nation not but 16 years young, he asks, how is success to follow inexperience? The GIC starts with 2 small teams investing in equities and real estate. Mr. Young sees the need for GIC to build up its investment expertise. He turns to Douglas Solomon from College Retirement Equities Fund, Theodore Garhart, who is appointed as the first director of real estate, and John Koneman, who would later become the first director of equities. They would also train GIC's investment officers. Amongst them is Kok Sung, who in time becomes the first director of bonds and equities, and later GIC's first managing director for public markets. Subsequently, the GIC becomes the first to pioneer the CFA program outside of the U.S. to provide structured investment training for its officers, providing a stream of trained professionals for the growing financial industry. This is the mid-1980s, and U.S. stock trades are compiled by late evenings in Singapore and faxed across to brokers in the U.S. for execution. So in 1987, a trading desk is set up in the New York office to monitor the market in real time and bring down trading costs. Settlement and finance operations soon follow, allowing the GIC to develop its own capability in middle and back office functions. It matures as a full-fledged public markets investor. Meanwhile, in 1986, the Special Investments Department is set up for the first time. Its focus, non-listed investments, buyouts, private equity. This is the 1980s, and the buyout business is still very much a cottage industry. Our first private equity investments were in the 1982 and 1984 KKR funds, which turned out to be among some of GIC's best buyout investments. Like buyouts, venture capital was quite novel among institutional investors in the 1980s. In 1986, our private equity team commits to Sequoia Capital, and together they invest in Cisco Systems, which becomes arguably one of the best investments in terms of internal rate of return. With enterprise and persistence, our private equity team grows to manage a sizable portfolio in buyout funds and direct investments. Foresight, tenacity, and perseverance pay off in the form of higher yields, a reminder that will serve the GIC well as it enters the 1990s. Responding to the Asian markets as they relax restrictions on foreign property investors, Real Estate Group becomes one of the first foreign property investors in South Korea and Japan. Today, the GIC real estate portfolio has broadened beyond brick-and-mortar investments to include REITs, funds, and public and private debts in real estate entities. At a time of global uncertainty with unfavorable odds, only a few brave men dared to envision the unknown, and even fewer had the tenacity to ask, why not? Today, standing on the shoulders of our founding fathers, the question of the day remains, what next? As first world first movers, the GIC asks itself once more, who are we? As we are called upon to reshape the organization in an ever-changing, increasingly uncertain global economy, we remind ourselves that questions shape our world. Bold questions, brave questions.